We're a few minutes away from the opening bell on Wall Street on this jobs report Friday. Lots of things for traders to consider today. We had jobs up 528,000 in the month of July. But of course, Julie, we're still smack in the middle of earnings season. Let's start with shares of Lyft here. We're seeing it up about 6% here in the pre-market. Company beat on earnings, beat on operating profits pretty aggressively. And then, hopped on their earnings call last night and teased potential $1 billion in operating profits by 2024. Some of the estimates I saw out there in the street modeling for about $700 million. So big ambitions for the team over at Lyft.
It's so interesting to me, the trend that we are seeing, not just at Lyft, not just at Uber, but kind of across the board, is that even as prices are higher, people are still spending, right? And so this, I think that's really evidenced by this quarter from Lyft as well, because we saw a 16% increase in active riders to 19.9 million. It's the highest since the start of the pandemic. And this is even as we have seen higher prices for these types of rides. People are out there, they're traveling, whether they're traveling via air or via car or via someone else's car. And the revenue per active rider, $49.89, the second highest on record here. So it's just partly a factor of people just getting back out there.
This is no recession morning here on Yahoo Finance Live. Strong jobs report, and to your point, yes.
Another thing where I'm like, I don't know who's
You don't even know where these things are
today.
coming from, right? But yes, I know. But you have to call it like you see it. And Lyft has pushed through higher prices. Uber has pushed through higher prices. Good quarter for Uber a couple days ago. Lyft out here doing pretty well. Outlook, little trimmed, a little below, I think, what some folks were looking for. But by and large, to your point, you're seeing consumers embrace or being able to handle some of these price increases. Why? Because it's probably a higher income person taking ride shares. And as we just heard from Joe Brasuelis, the high income consumer, by and large, it's holding up pretty well. They're holding up pretty well.
There are also more drivers that both of these companies were adding. I believe Uber added, on a percentage basis, added more drivers, but 25% was the increase for Lyft active drivers. New signups up almost 35%, because this is obviously also a very important part of the story. It's not just getting people who want to ride in the cars, it's getting enough people to drive the cars. And that's been a challenge for these companies. So,
am I too positive today? I know it's weird, right?
I'll
clarify. I'll go back to AMC really quickly. I know we're coming up against the opening bell. We're still watching AMC shares getting hammered, but look, I mean, the fundamentals of the movie business, they're doing okay. They're all right. I'm not totally on board what Adam Aaron is doing, but at least the fundamentals of going to the theater, that's getting better. I've seen a turn in the business.
And I guess he's attempting to make that sort of slow and steady business.
I'm staying skeptical, but I understand things are starting to turn. You see AMC shares under pressure in the pre-market, of course.
They're not turning.
They're not turning, but the movie business is looking a little bit better.